Well, inflation, as we were telling you around 4:30 this afternoon, inflation is soaring in January, topping out at 3% for the first time since June of last year. Food and energy prices drove the increase, with one of the largest price surges coming from eggs, which cost 53% more than this time last year. Local certified financial planner Michael Newenswander from Outlook Wealth Advisors joins us now to break down what this new data could mean for the economy and how to keep your wallet healthy in the midst of all this. Michael, thanks for joining us.
Oh, thank you.
Let's start with why inflation was up so much last month. What are you thinking there?
Well, yeah, as you kind of mentioned, I mean, inflation ticked back up. It's actually the third month in a row that it's picked back up. So that's definitely causing some concern. But it's certainly been driven by food, by energy. I mean, you mentioned, and as everybody feels, the price of eggs has gone crazy, but even bacon's up 4%, other seafood's up another 1.5%. So it's kind of across the board, tack that on with, natural gas being up almost 5%. We're definitely sort of feeling the inflation again, which is what's giving the Fed sort of pause, to lower rates any farther.
Yeah, and those numbers have been so persistent. Why has inflation been so stubborn?
Well, one of the other big things that's in there is basically the pricing for housing, whether it's apartment rent or whether it's people trying to buy a house, that interest rates are still up, housing prices are still elevated, and until those really start coming down, inflation's probably going to stick closer to that 3% number versus the Fed's target, of 2%.
And you mentioned, interest rates and whether or not they could dip at all this year. The Fed cut them in December of last year. What could this mean for meetings this year? What do you expect?
Well, the outlook, or at least the predictions for the Fed are that they'll still cut rates probably a couple of times this year, but that's really backed off compared to what was expected last October. So they were thinking maybe 4 rate cuts. Now it's maybe backed down to 2, but probably not coming until the latter part of summer. So it's sort of we're stuck in that position where politically, if we're talking about tariffs, other things that may potentially increase inflation, the Fed is just taking it very slow. They're not going to cut rates, particularly as long as we see inflation stay sticky or tick up like it did here recently.
That's a painful reality that we're looking at here. With prices, Michael, continuing to rise, how can people really cope with this higher cost of living?
So when we know certain things are fixed, meaning we touched on a few, but I'm sure we all feel the pain of trying to renew our auto or homeowners insurance. That's gone up quite a bit. So the best thing you can do is really buckle down, if you will, get into the budget of where are you spending money? Is there a lot of streaming services? Is it the Starbucks habit? When you look at yours personally, where are things going that you could potentially cut back a little bit? So that's one. It's just simply looking at where things are going. The other, when we talk about high interest rates, credit card rates are still sky high, up above 20% for a national average. So trimming those things that you're paying high interest on. So if it's a focus on paying off debt, paying down the worst of the credit cards, anything you don't have to pay in interest is additional money that stays in your pocket, allowing you to absorb a little bit more of this inflation. And the third thing is to really make sure your money's working for you. So one side benefit of the Fed not cutting rates is that high interest savings accounts, relatively conservative income kind of fund investments are still paying really good rates. High yield rates above 4, many income kind of funds are up above 6. So getting with your advisor, your investment person, and making sure that your money is working for you is the other best way to sort of cope with what's going on.
Some really good advice in the wake of not the best news this morning on that inflation report. Michael Newenswander with Outlook Wealth Advisors, thank you so much for your expertise and your advice this afternoon. We appreciate it.